Hi guys, this video is regarding the financial news update from last week. So let's start. Chinese stock market suffered as the Chinese stock market fell 8% when it reopened after the New Year's break. The main factor for this was the coronavirus. Last Monday, the 3rd of February, the country's central bank poured almost $200 billion into the into the economy and slashed interest rates to make borrowing cheaper in order to stimulate the economy. On Thursday, China announced that it will also halve tariffs on $75 billion worth of American goods. As you know, there has been the US China trade war going on for many years now, and this has had a negative effect on the Chinese economy. Therefore, by reducing the tariffs, this will hopefully reduce tensions between the two countries. In response, the US announced that it will also halve tariffs on some Chinese goods. Oil producing companies and oil producing countries suffered. Oil producers ExxonMobil and Chevron posted disappointing profit results, and a plunging oil price could make matters even worse. The biggest nightmare for any oil company is low oil prices, as this lowers the revenue generated for the company. Oil prices averaged $71 per barrel in 2018, but just $64 in 2019. The oil price is heavily dependent on global economic growth, so it goes up when times are good, for example in 2018, and it goes down when there is uncertainty. And the coronavirus pandemic has brought global travel to its knees, as people are reluctant to travel, and this lowers the demand for oil. As a result, the price of oil has fallen 20% since the coronavirus outbreak. Hence, we may see a cut in supply of oil to increase the price. And this shows the effect of supply and demand in play. Major oil producing countries are thinking about cutting production to help with the loss of demand. OPEC, a group of oil producing countries, produce over a half of the world's annual supply, and they may respond by cutting supply. To add to this, the UK announced plans to ban the sale of all new gasoline, diesel, and petrol cars by 2035, and this further increases the uncertainty around the future demand and price of oil. On the back of Britain leaving the EU, many European countries published disappointing economic data. It showed that France and Italy's economies actually shrank last quarter. New data revealed the Eurozone's economy grew just 0.1% last quarter, slower than the 0.2% investors were expecting. Italy's economy in particular shrank 0.3% last quarter, when it was actually forecasted to grow 0.3%. This demonstrates the uncertainty surrounding such economies. The situation, however, was much better in the US, where the economy grew 2.3% last year. However, that is still below 2018's 2.9% increase. Also, let's not forget that the US made tax cuts to stimulate the economy, and they expected growth of 3%. And with the presidential elections in November, we may see further uncertainty. Google's parent company Alphabet reported weaker than expected quarterly results. The majority of Alphabet's revenues come from Google's advertising business via YouTube and many other websites that you may have experienced. But the overall revenue was short of investors' forecasts. Also, the real problem came from Alphabet's costs, which have increased. For example, the costs associated with paying companies to distribute their ads. Nevertheless, 90% of investment banks currently rate Alphabet stock as a buy. Now on to Tesla's stock, which has been rising rapidly, and there has been a large amount of hype created around the company. Tesla's stock price rose 200% in half a year. In 2019, Tesla opened a factory plant in China. The interesting thing about this is that China is seen to be as quite a closed economy for foreign companies to operate, as they are forced to comply with regulation and give away their secrets to the government. However, with Tesla, that does not seem to be the case. As well as this, the fact that China is the world's biggest car market is particularly beneficial for Tesla as they are able to appeal to a wider client base. Recently, we saw the creation of the Cybertruck, which again was a hot talking point on the news. Elon Musk is an interesting character, and he uses social media to create his brand image, and that definitely does increase the popularity of Tesla. Tesla has posted a few successive quarterly profits. However, the big question is, will this trend continue? And for Elon Musk and Tesla, this trend must continue if they want to be seen as a true and dominant force. Finally, audio streaming company Spotify saw its losses increase last quarter as many investors sold off their shares rapidly. Spotify has a total number of 124 million subscribers, which is a lot. And it shows that Spotify is definitely a market leader. However, it has spent a lot of money on producing new podcasts and a lot of investment to diversify their business, and this would have definitely led to the increase in cost. However, the concern is that will this continue? And if so, the increasing costs may be seen as a potential problem by investors. I hope you found the financial news update useful. Please subscribe, like, and share, and I'll see you guys soon. Bye for now.